Perfect. Good morning, everyone, from TikTok and also from YouTube. This is Ida. I know it's been such a long time. It's been 2 weeks since we've been on any one of the platform because of life. Kids are graduating in my house, and it's been a crazy and beautiful season. From track and field, soccer, graduation. We've been running, but now we're back. So my name is Ida. I am a licensed real estate agent, also property manager in state of beautiful Minnesota. And I am a team lead as well with Gojo Realty. And today we are here to talk about a bunch of different things that you guys probably don't have an idea, but we wanted to go over detail what's going on. So we have Peter Jerfin here with us. Peter, go ahead and introduce yourself.
Hey guys, my name is Peter Jerf with Custom Made Mortgages. I'm a loan officer licensed in Minnesota. As always, this is general conversation, so this is not legally binding. We're not extending you credit, that type of thing. But if you want to apply, you can. But yeah, so we're just here to help teach and educate and help you understand the home buying process. And even if we talk about, like I think today we're going to talk about disclosures and loan estimates and buying points and that type of thing. Even with that, if you guys have other totally unrelated questions, you're talking about investment property and something else or whatever, feel free to ask the questions. So we're always here to answer anything.
Perfect. We cannot see your face though, by the way.
Oh, is the background messing it up?
It says that live paused. So don't know, but it's all good. So Peter just mentioned that to us, that interest rate. Yeah. Welcome back, Peter.
There we go.
Interest rates. He said that it looks good this morning. And good morning, Hannah. And I think a lot of people have kind of an anxiety of purchasing property just because of the interest rates. And as you guys know me, that I don't. Yes, we need to figure it out what the interest rate is. But when you use your credit card, do you check your interest rate all the time? Not really. I have never. I've been using credit card over 30 years and I have never checked that. So sometimes we just need to, it's a risk take on any investment. So property being property, purchasing property is just a different, investment because you're going to live in it, and you, instead of paying your rent, you just pay mortgage and you are investing on yourself. But a lot of people, they have a tendency of like thinking of what? Mortgage, interest rate. Everybody is scared of interest rate. But I have a couple of clients right now that I connected with them last week. And now you said that, Peter, am I going to reach out to them again? The interest rate is high. I'm going to wait for until September, October. I understand, but the property that you wanted to buy right now, it might be a $300,000 property. By the time September come, it might be 320, 330. So and here where we are in Minnesota, property has not dropped. Possibly just stay what it is right now with the pricing. I don't see that much multiple offers or whatever, but their properties are coming out and they are out of our lead software within a week. People are still buying. So if people are still buying, what are we waiting? I don't know. That's the fear. I understand. But let me tell you guys, almost 26 years ago, I used to work for a mortgage company. I used to be a loan officer like Peter. At that time, I was young. I don't need a license. Now you have to have a license. And we never asked those things. So I just went in, did that part time. So I used to help with our community doing refinancing and this and that. Do you know how much was the interest rate people were like refinancing? 14, 15%. And so they were actually refinancing to go down to like 11 or like 9.5, 9.25 sometimes. So right now, I think we kind of getting spoiled with the pandemic interest rates, the 2% and 2 point whatever interest rate. It just, it's not gonna come back. That interest rate, if it comes, that means, you know, that the economy would be like diving. So just think about it. Right now, I manage property, right? So my people right now that who's renting those properties are building their credit. They are out purchasing property. So those people, they are not worried about their, you know, their what the interest rate is going to be. What they worry is like, hey, I'm paying right now $2,500. Why should I give him my money to whom? To the owner of that property. So we have to be really smart and trying to understand the system. So the reason that we're here for you guys to hear this, question yourself, is it worth it? Search more about it, and then move on. So with that said, Peter, your stuff looks mute, but I can hear you. I don't know about your TikTok today. So now you're muted. Now, yes, now it came out. Yep.
I don't know what happened there.
It's Wednesday. You know, TikTok is confused. You know, it hasn't seen us for a couple of weeks. They'll be like, I don't think we want it to be nice for these people. But, you know, mention something with the interest rates. It's a good news that you just drop for us. And I really appreciate it. You know, insights of lender, you know, we'll get some info. So go ahead and start your thing.
So I mean, interest rates obviously a big deal. Sorry, there's an underwriter calling me. The interest rate's a big deal, and they are, like you said, they're coming down. And the other thing for people to remember, like hopefully they come back down to 2-3%, but that's also not realistic. You know, you don't go to the casino and say, hopefully I win $1 million today, and that's going to take care of my bills. You know, it usually doesn't work out. So, you know, and if you think about it, like during the pandemic, we had the lowest rates in, you know, pretty much ever. But look what had to happen to create that situation.
Mm-hmm.
It was a very weird time. Things are getting shut down, people losing their jobs. Like, you know, it's kind of unprecedented in modern society, or ever actually, to have a situation like that. So same with the rates. It's pretty crazy to think, you know, and everybody right now, all the experts, all the people that do this all day, they all say that, you know, oh, we're never going to see those rates again. We could never say never, but if you're hold out, you wait for it, you could be waiting a very, very long time, maybe forever. So, so, you know, as one, probably like one of the top analysts in the country, he always says, if you have to ask other people to buy a house, he's like, maybe you shouldn't buy one, because you have to take responsibility for it.
Yep.
And part of that, if we're going to talk about disclosures today, is making sure you read your disclosures, because I'd say it's very common for people not to read it. And you don't necessarily have to get into every single detail. Ida and I had a client a couple years ago who was an auditor for the state. And I think he said he had 3 monitors up and he was reviewing it all weekend. So you don't need to get that detailed, but just even taking 15 minutes to read through it and make sure that everything looks right. And if it doesn't, ask questions. You can look it up online, but I mean, you're paying your loan officer, so you might as well ask them because they know your specific situation. Online, they don't know it. You don't want to upload your personal documentation just for some random person to tell you their opinion of it. So, I mean, that's a really big thing because I'd say that's probably the most common thing that comes up on the lending side at the end of the process is people realize they're being charged for things that they didn't realize they were paying for. And so you really want to make sure you understand those type of things. So, you know, if you guys want, like, you know, I don't know, I'd say the biggest things on the loan estimate. So when you start the process and it officially begins, once you get a house, you'll get what's called a loan estimate. And on there, it's a more truncated or like a shorter, more simplistic version than the one you'll get later on, which is called the closing disclosure. But on there, you can still see your fees. Now, a few things. Some lenders like to play games with the fees to try to make it look cheaper than it is, or best case scenario. Basically, it's not a lie, but it's best case scenario. And we can go over those details. If you really want to know that, we can go over that. Probably you can call me. We can do that because that's kind of boring to talk about. But they'll make all the fees look as low as possible. What you really want to look at is Section A fees. And in Section A, that's the lender fees.
So explain to them that what is disclosure? What is loan estimation means? What is that? Because they don't know what that is at all. So what are those things? You know, what it will define it. I think that's why the confusion is when you say estimation, it is an estimation. What is estimation? What is that? What is disclosure?
Yeah. So when you apply for a loan at the beginning, like if you called me today, first time, never talked to anybody, I'm going to have a conversation with you. I'm going to ask you what your goals are, what your short-term plans, long-term plans, and then what you're trying to accomplish in this specific situation. The reason for asking for the short and the long-term plans is because these are long-term loans. Most of them are 30-year loans. And a lot of loan officers will just more be an order taker like McDonald's. So you call them, you talk to them, they take the order, that's it. And some clients, that's all they want. So if that's all you want, that's fine. You know, I'm not going to force you to try to get more value out of it. But the important part of that is to make sure that you're seeing the whole picture. Because anytime you go to someone to order something, they're going to try to make it as simple as possible for themselves. Because then, you know, if you go to McDonald's and you order a cheeseburger, they're not going to do a bunch of other things to try to help you out. They're going to get your cheeseburger, do it, give you what you ordered, and move on. So you'll go through that process. We'll have that conversation, and then provided you guys are still serious, you still want to apply, you still want to move forward and at least see where you're at, then we'll do what's called a pre-approval. So I'll have you fill out an application, or we can do it together, or I can even do it and just ask you the questions over the phone, and then we'll fill that out and complete it, and then we'll get some documentation from you as far as like pay stubs, W-2s, bank statements. Basically, we need to see your financial profile. Just like you have a health profile when you go to the doctor, they check all your health things. Same thing with us, we check all your financials. So based off of that, then we'll come up with a game plan of like, okay, you're pre-approved to buy a $400,000 house. You need to spend $25,000 on the down payment and closing costs. And then at the very beginning, there's a variety of sheets that you'll get. That's not all uniform. Some companies, they might send it to you on like, it almost looks like a Word document that they just typed up. I'd say that's a lot of them. It's called a fee sheet. We have that as well. but a lot of times I will send you kind of an easier to read version of that, because the fee sheet will have all these different fees listed that probably don't make sense especially if you've never bought a house. And so we try to put it in an easier to read format. And then if you're looking at multiple options, or there's multiple options that look like they're good for you, we'll list those side by side so you can compare them and see, like, okay, here's how much I'm paying for closing costs. Here's what the interest rate is for this type of loan. Here's the benefits of the loan, maybe some negatives, if there's any negatives involved, things like that. And then we can go over that with you as well and compare those things. Once all that is complete, then I'll tell Ida, hey, this person is pre-approved. You guys can go look at homes. Here's the purchase price that they're looking for, let's say around $350,000 to $400,000. I will have already gone over and shown you what the monthly payment estimate is. It won't be exact to the dollar, but we try to estimate as close as possible. So then when you look at the house, let's say you go look at a $350,000 house and a $400,000 house, okay, the $350,000, the payment for that one might be like $2,300, $2,400, depending on your down payment. The $400,000, that one might be, $2,700, $2,800, depending on your down payment. Could be $3,000, depending on the different factors involved. So that way, when you see the house, you know exactly what to expect. And then if you want to put an offer on it, as well. Fast forward through that whole process, you get the offer accepted. You'll get what's called a loan estimate. This is the first official disclosure. And on that loan estimate, it will break down the cost of the loan process now that you have a property selected. So you have to pay the lender, you have to pay realty fees, you pay title fees to the title company to process that paperwork and file it for you so you officially own it. There's government fees like paying taxes on it. And then you'll also have what's called an escrow account. You can waive it. That's probably a different conversation for a different time. But that escrow account, when you buy a house, you have everybody that owns property in the United States, unless you're a nonprofit, you have to pay property taxes. And the property tax is based on the value of the property you own. So if you buy a $400,000 house, it's going to be a lot less property tax than if you buy a $600,000 house. Because again, it's based on the value. That gets paid to the government and the local government, your county, your city, pay for schools, pay for the roads, all those type of things. The other part of it is you have to have home insurance, just like on a car. So what we'll do is create a free escrow account for you. And every month you pay the same amount for those policies. Now for like home insurance, like car insurance, usually the best deal is if you pay the whole thing at once a year. So the lender will pay that on your behalf. Let's say it's $2,000. And then over the next 12 months, or let's say it's $2,400 to make the numbers easy. $2,400. And then over the next 12 months, they will collect 1/12 because of 12 months to be able to have $2,400 next year when the bill's due again. So, 12. So in this case, it'd be about $200 a month. So 12 times 200 is $2,400. If your bill was just due June 1st, they'll collect that $200 every month for the next 12 months. And at the end of next May, they'll pay the bill again for you. That way you don't have to try to pay $2,400 once a year and come up with that money. Next June comes and all of a sudden you're like, I got to pay my insurance. I need $2,400. That's a big bill. I don't have it saved up right now or whatever. So you can pay it through the lender. Same thing with property tax. And property tax in Minnesota, every state is different. Minnesota is twice a year. Usually it's May 15th and October 15th. So let's say your property tax are $3,600 a year. The lender will collect $300 a month because 300 times 12 is 3,600. $300 a month. And then when it's due in May, they'll pay that for you. When it's due in October, they'll pay that for you. And again, there's no fees involved for that. So you're not being charged a service fee. That is just to help you have your bills always be about the same every month. Yeah. And that way it's not fluctuating. So that's the other part of that form that's going to be on there. So altogether, that will be called your closing costs. So you have your down payment, So if you're buying a $400,000 house and you're doing, let's say minimum down payment is 3%, that's $12,000. So a $400,000 purchase price, your loan amount would be $388,000. So you'd be paying the difference as the down payment, which is $12,000. And then the closing cost to pay everybody involved in the transaction who's going to help you, and also set up that escrow account. Usually we estimate, at least with us, it's roughly between 2.5% and 3%. So we always estimate 3%. Some lenders it's higher. Some lenders, I don't think most lenders are much lower than that. I've seen some that are like, I think the highest I've seen recently is 5.5%. So that's where you also want to shop around, because that lender they're charging more fees. So they might be charging additional fees for different things. And so getting back to what I was saying originally, in Section A, that will have the lender fees. Section B will have it'll be a slight variation lender to lender. But on that loan estimate, you'll see Section A, it's the very first section, and that will have processing fee, administration fee, underwriting fee. That's where the points, if you're buying the rate down, you'll see that. If there's an origination fee, that's where you'll see that. All the things specific to the lender. So if you are looking at multiple lenders, you can compare, but that's usually the section you want to compare, not necessarily the whole thing. Yeah. Because some lenders, like I said, it's very detailed and kind of boring. But if you're in that situation, you can always call me. We can go over it. But they'll go through the other sections and estimate best case scenario. So even if you're buying a $400,000 house, they might estimate, well, maybe you could get an insurance policy for like $1,200 a year, because it's going to make your monthly payment look lower. Mm-hmm. Well, I can tell you right now, unless you're buying a brand new house and you're getting insurance through the builder's company, you're not going to be paying $1,200 for a $400,000 house. It's probably going to be closer to $2,400. So you come to me, I put $2,400 on there. It makes the monthly payment look like it's $100 more a month than somebody who estimated it's going to be super low. And they sometimes do that with all the different fees. But once you get the house and you get into the underwriting and your file gets submitted to the lender and you're in the process of buying the house and you get that insurance quote from the insurance company and they say it's $2,400, well, now the lender has to update it, and now your payment just looks like it went up $100 for no reason. And you didn't increase the loan amount, you didn't do anything like that, and that leads to a lot of frustration. And the lender kind of is like, well, oops, I guess it's more than we thought. But at that point, usually it's too late to switch lenders. So there's a lot of like games that get played that way. So that's again why you want to look more at Section A more than anything and compare those lender to lender. And there is a way to do that with the fee sheet as well. It's a little bit harder because it's not broken up in sections, but anything that has to do with the lender, the main fees, again, underwriting fee, processing fee, administration fee, points if you're buying down the rate, and origination fee. Those are the main things in there. I've seen a few lenders charging, I forgot what they're called now, but it's another fee that's basically, we call those like junk fees because they're just adding things in there. It's not really, it's like if you, I think one of the big ticket companies selling tickets for concerts, they've been getting a lot of, flack publicly because the ticket costs $100 and then they charge you a $5 processing fee and a $3 handling fee and a $9 this fee. Those are called junk fees. So a lot of lenders, they'll try to make the rate better. So they give you a lower rate, but then they add all these junk fees in Section A. So their rate might be 6.5, my rate might be 6.75, but I'm not charging you all these other junk fees, and they are, and those junk fees might add up to like $3,000. Well, if you spend $3,000 on the rate with me, because we don't have those fees, you might get 6.375 rate or 6.4, something better. So you want to compare those together to be able to see the total picture, not just one specific thing. Because as professionals, the number one question we always hear is, what's the interest rate? Because that's what people know what to focus on. Yeah. And the two biggest things with that is seeing if you're buying points, because the lenders will forget to tell you you're paying for that. And Ida had that happen with a different lender, I think, recently, where they, oh yeah, we're going to get you this really good rate. And then they didn't realize they actually have to pay for it. And then the second part of it, like I said, all those other junk fees where you could say, oh, this lender's not charging me any points or fees for a 6.5 rate, but all these other fees are $3,000 higher than this other lender. And if I use that $3,000 to buy down the rate, I'd actually get so the second scenario is actually cheaper than the first one. So, and I know that this is kind of complicated. So if you guys have questions or anything comes up, you guys can always reach out to me. I'm going to make a video about it too. I was thinking we could do screen share, but I forgot TikTok. I don't know how to do that. So, but yeah.
You can only flip your camera. That's the only thing that you'll be able to do that. But with what you just said, Peter, Belaye, thank you so much, Inikonjo. It is interesting because I talked about this incident it might be a month ago or so to my audience on Sundays. Whenever you get pre-approved or if the lender says that, you guys know that I'm not a lender, so that's why I'm bringing Peter. I'm going to meet you, okay, Peter? So the incidents that always happen when we don't ask question. We do not ask question. Whenever they tell you to sign, you go ahead and sign. No, have to ask question. I don't care if you guys don't know the language. Have someone who speaks the language and ask for you. Means, and I'm Amharic, ጥያቄ መጠየቅ ጀምሩ። ጥያቄ ካልጠየቃችሁ ሞርጌጃችሁን ፕሪ-አፕሩቭድ ስትደረጉ or in the process disclosure ብሎ አሁን ፒተር የተናገረው ነገር አለ። ዲስክሎዥራችንን እንዴት ነው ዲፋይን የምናደርገው? So ይሄ video, by the way, is going to be on my YouTube account. It's recording right now. And now, have a courage to ask question. ጥያቄ ካልጠየቃችሁ ሰላም፣ ጥያቄ ካልጠየቃችሁ ደጃዝማችነትን ይቀራል ይባላል። So ጥያቄ ካልጠየቃችሁ ዳይቭ አድርጋችሁ ውሃ ውስጥ ነው የምትገቡት። So a couple of weeks ago ከፒተር ጋር አይደለም my client approve የተደረጉት ከሌላ ካምፓኒ ጋር ነበር። ከፒተር ጋር አድርገው ሌላ አፕሩቫል ሲሰጧቸው ኢንተረስት ሬቱ ሎ መስሏቸው ዘለው እዛኛው ለንደር ጋር ሄዱ ማለት ነው። So they left Peter, they went with another person, right? So what happened was እዛ አፕሩቫላቸው ላይ የሆኑት ምንድን ነው? When we looked at the paperwork እና ሪቪው ስናደርገው ዲስካውንት ፖይንት ይላል። አሁን ፒተር ምንድን ነው ያለው? የሆነ ጃንክ ፊ ምናምን ብለው ዲፋይን ያደርጉላችኋል አለ። There says discount fee. That discount fee ምንድን ነው? ከየት ነው የመጣው? They used to put it miscellaneous fee ይባል ነበረ። አሁን ዲስካውንት ፊ ያደርጉታል። ዲስካውንት ፊ ምንድን ነው? ኢንተረስት ፖይንት ያስገዟችኋል። So let's say Peter gave you 7% and I gave you 6.2%. ማን ጋር ነው የምትመጡት? እኔ ጋር, right? Because I'm giving it to you 6.2. You leave the Peter እኔ ጋር ትመጣላችሁ ማለት ነው። Why? Because I'm giving it to you a lower interest rate, right? So if I give you that lower interest rate, you have to look at your disclosure, what I'm charging you. Is it really that interest rate that I'm getting? It is true. ብላችሁ መጠየቅ መቻል አለባችሁ። Okay? The reason being ይሄ ችግር የሚመጣው ምንድን ነው? ልክ ልዘጉ ስትሉ ዲፋይን ሲያደርጉላችሁ ዲስካውንት ፖይንት ብሎ 5,000 ብር ክፈሉ ትባላላችሁ። That's what happens to my client. So we have to let the lender know that this fee should not be seller ገዢው መክፈል የለበትም እና እንደ ክሎዚንግ ኮስት አድርገው ነው ሴት አፕ አድርገው የሚሰጧችሁ። So you need to figure it out, this thing. Anytime when you purchase property or refinance, Peter, is it refinance? Did they put discount point as well when they refinance, or just only purchasing? I think they do the same, right? Unmute yourself.
Yeah. They so right now in the industry, the standard is to try to sell people 1 to 2 points on every loan. Okay. And there's a couple reasons for that. The main one is to make the rate look better to the client. So, and they like to kind of like blow right past it, because you guys got to remember too, loan officers are salespeople. They're not advisors. They call themselves advisors, and some of us are actually certified as advisors because we took those courses and got those certifications. But at the end of the day, when you kind of remove all the other stuff and just point blank look at it bluntly, they're salespeople, and that's how they're paid. That's how the whole job is built out. That's what they're trained on. The number one thing that loan officers are trained on is how to sell and how to overcome objections. So the number one training that they get is when Ida comes to buy a house and she says, "Oh, I don't know, this looks kind of expensive," is how I can convince Ida by telling her whatever I need to tell her so that she says, "You know what, I'm going to do it."
Yeah.
If you talk to a loan officer who gives you the options and then tells you, "This is the different options. Here's the pluses and minuses. Here's why this is a good idea. Here's what you need to be worried about or at least aware of to know what you're getting yourself into," that's somebody who's being honest with you. And if we learn to kind of like gauge people, because of what, it's very important, because the one thing I notice is a lot of people gravitate to whoever tells them what they want to hear. So if the first phone call, the loan officer is giving you 1,000 compliments on everything, like I always joke around, they're like, "Oh, did you lose weight?" And that's the first time they met you, like that's, it's like that attitude, they're selling you. They're trying, that's their job, and that's okay. Just like when you go to the store, you try to order something, they're a salesperson, they're trying to sell to you. But again, you want to know that, so you want to protect yourself, because it's different coming from them than it is from, a family member who's telling you, "Hey, this is a good idea because you get a house for your kids and blah, blah, blah." The loan officer is telling you things. And again, it could be true even, but they're trying to sell you. So you just want to be aware of that and have the right context, because then, so you don't necessarily just fall for whatever they say. I could go on for that for a while, but that's the big thing. Just remember, and like I said, good loan officers will give you the options and show you the pluses and the minuses, the good and the bad for both, instead of just focusing on the good and just kind of like hyping you up. "Yeah, you should do this, and yeah, get a house, and yeah, do this, da 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 da." They don't care about that. They care about getting paid.
Yeah. So most of the time, I think when you go to the lender or even with the real estate agent, what did I always tell you, Steve? Tell me, write something under. What did I tell you all the time? Before you stuck with the loan officer or the real estate agent, even with the insurance people, what did I tell you to do? Steve, read. Okay. What else? Good job, user. Research. Okay. What else? What else? When you guys go to, when you guys are, before you get hired for your job, what will happen? Okay. Good job, user. Proud of you. ማንበብ, yes. አንድ ግን ጥብቅ የሆነች ነገር ይነገርኳቸዋል። there's important stuff. ምንድን ነው እሱ? ስራ ከመግባታችሁ በፊት፣ ስራ ሃየር ከመደረጋችሁ በፊት ምንድን ነው የሚያደርጓችሁ? መጀመሪያ እስቲ ዩቱብ ላይም there's 7 of you guys. One of you guys should answer this question. Give me an answer. Hey, you go, user. User passed. Hannah, interview. Good job. Yep. You have to interview whomever that you're going to be working with. I have the interview questionnaires. If you guys needed it, reach out to me. You have my number on my bio. If you guys are on my YouTube account, you guys can reach out to me. Gojo Realty, Aida Tazarra, Bilachu Kapellagachu, you guys can find me. You have to interview your people. Then you can compare. ይሄን ስጠይቅ ይሄ ሰውዬ እንደዚህ መልሶልኝ ነበረ። ይሄን ስጠይቅ እቺ ሴትዮ እንደዚህ መልሳልኝ ነበረ። ይሄ ሰውዬ እንደዚህ መልሶልኝ ነበር። So, which one has a knowledge? Ahun, I have close to 4 people from TikTok that who I help to interview their agents and loan officer. They are in the process doing an inspection. They're in the process doing a lot of different stuff. So with that said, your ability to have a peaceful transaction, and what is it? That you have a common የምትፈልጉት ነገር ሁለታችሁም አንድ common ናችሁ. Yes, the guy will do this thing and the agent will do this thing and then they can do this thing. And now, thank you, Bella የኔ ቆንጆ. So with that said, like Peter said, anyone who's giving you a compliment before he does not even know you, that is something. You guys have to think twice and understand the situation as well. What are that person is up to? What did he really gonna do for me? Ask question. ጥያቄ ሳትጠይቁ ምንም ነገር አታድርጉ. Okay? Go ahead, Peter. So with that said, you can start what you were planning to talk about earlier. You know, most of us, we don't know what this disclosure means. And when me and Peter do the transaction, what we always let people know that, okay, you started this, you already done this, and then next is going to be this, or it's gonna be this, and it's gonna be that. So when the lender sends you a disclosure, what is disclosure? He break it down for you guys already. Okay, so what are the stuff that you need to be watch on? What are the stuff that you need to be focused? And if you don't have no idea, ask question. So Peter will go over the rest of the stuff that we talked about. So I don't know if we can see it.
This is, I'm zooming in on my computer, so I'm sorry for the glare there. But this is like one version of an itemized fee worksheet. So this is sometimes the first thing you'll get. And this is actually formatted a lot better than most of the ones I see. Most of the ones I see from other lenders look like somebody wrote it on a Word document. There's no picture, there's no nothing, there's no columns, like it's just literally words written out. Now this is just a fake profile, so there's no charges in here, so I should actually update that. But as you can see, there's origination charges. So I actually break it down too between the different items that you would see on on like a loan estimate. So it's very similar to a loan estimate, which I'll show you guys next. So you got the interest rate up here, APR, term, type of property, loan amount, interest rate, purchase price, type of loan, all those things. Then obviously my information, it says itemized fee worksheet right there. So that's usually the first one you'll get. And again, I've seen a lot. Actually, let me see. Let's see if they're not. Let's see, mortgage. I just want to see if these come up. So here's, if you put mortgage fee, and I type worksheet wrong, but a lot of them will come up. These are all different versions of it. Oh, that's Freddie Mac, actually. This is one company's. They have a lot of words up there. The different fees all together, as you can see, they're not split up like mine was, where it's showing each section. So you got to kind of go through it and know what you're looking at. Or again, you should be able to ask your loan officer detailed questions and ask them to go over each line item with you, and they should be able to. And again, that's the first one you'll get, and that's just a general estimate, which is why at the top you'll see it says your actual rate payment could be higher. Get an official loan estimate before choosing a loan. So you can ask for the loan estimate. You just have to be able to submit more documentation usually to get that. Once you get into the loan process, you'll get something like this. So this is what the loan estimate looks like. Loan estimate right there. And every lender has to use the same format of this type of form. So you'll see the company name up there, the lender's name, the loan terms. So the term, purpose, product, loan type, rate locked. Over on the left side, you'll see the property, sale price, date, and your name up there. And then as you can see, you'll have a loan amount, interest rate, monthly payment. And again, I know it's kind of, there we go. You'll have all these broken down, and every lender, this will look the same. So you'll have the main information up here, and then you'll have the monthly payment broken down. So that first column right here, that's the loan payment itself. This is mortgage insurance, which if you pay less than 20% down, you have to pay that. We can go over that later. And then this is that escrow for your property tax and insurance. So in this made up scenario, there's no mortgage insurance, $500 a month for property tax and home insurance, and that's the full 30 years. And this is how much the payment would be. And yep, so you can see over here, estimated total monthly payment. And then that's where that is. I'm just zooming in a lot, so hopefully to get rid of most of the glare. And then below here, this is the most confusing part of the form. If you have an HOA, it's this amount plus the HOA dues. So this property does not have an HOA, but if it did and the HOA was like $300, this would show $800. That is not an additional payment to this. This is just adding in the HOA. It's the most confusing part of the form. So a lot of times people see that and they think they're paying $28.39 plus what's down here. That's not the case. So again, this is a made up file that I haven't completely built out yet, which is why the closing cost shows 0. There's no loans with 0 closing costs. So, and also side note, for refinances, a lot of, not to pick on realtors, but a lot of realtors, they tell their clients they can get them free refis because that's what the lenders tell them. There's no such thing as a free refi. And we could probably go over that next week or later on this call, what those look like and what those really are, because it can be free in a sense, but you're getting a higher interest rate. So, but it's kind of disingenuous, in my opinion, to not being transparent to say it's free, because it's not really free.
No.
So this is the first page you'll get. Looks the same for everybody. Well, this whole form does. This and the next one, the closing disclosure. So this is where the fees get broken down, the second page. And so when I say section A, it's the very first section, origination charges. So you'll see there's section A, section B right there, services you cannot shop for. So those are things like the appraisal, checking the flood certification, the tax service fee, credit report fee. But those section B are lender fees too, usually, or related to the lender, but they vary. The variance is very small usually. So you still want to look at that, but usually lender to lender, it might be a couple $100 max difference. And then section C, this is where usually the title fees are. Title fees might be in section B too, if you use the preferred title company. And then down here we have section C or section D, which is just adding all those first 3 sections up. And then over here we have other closing costs. So these are section E, as you can see, taxes and other government fees. So these are anything you'll pay the government. The big thing here are the transfer taxes. That is what you'll pay on the transaction. So usually you'll split that with the seller. I think there's a few new builders like D.R. Horton and Lennar that make you pay the whole thing. But most of the time, if you're buying an existing house or a new build, you'll split that cost with the seller. And then the next section is F, which is your prepaids. And that you'll pay your home insurance at the closing for the first year, any mortgage insurance premium that you'd have on a government loan like FHA, and then interest that you pay for the days that you own it. So some of these fees are where the lenders will estimate super low in order to be able to make the numbers look better, but they're not always accurate at the beginning. So like in this case, you can see over here, everything's zeroed out. That would be a major red flag. Usually it's not zero. Usually it's very low, but it's not zero. And then this is setting up that escrow account to pay your property tax and insurance later. So you see mortgage insurance or homeowners insurance, whatever the monthly amount. And then usually, and again, I didn't fill this out. Usually you collect 3 months there, 3 to 4 months. And then the property taxes, you'll collect about, depending on when they're due next, that will determine how many months we collect for, anywhere from usually 2 to 7 months. So the property tax are due next month and you're closing today, we'd be collecting probably 7 months because they got to pay the full 6 months and have a little extra in there. Actually, it'd probably be 8 in that case. And then section H are the other fees. So if you're buying an HOA, there'll be HOA fees, any other service fees in there, the owner's policy that helps protect you from previous owners' lawsuits, and if they owed anybody money, that will be listed here. And then section I below that will total up those last 4 columns. And then section J will have everything in there. I plus D, which D is the first 3 columns. And then it'll add everything up over there. Again, these show 0 just because I haven't built this loan out yet. And then down here, I'll be calculating your cash to close. So your total closing costs will be over there. Sorry, I'm trying to zoom in here. Closing costs financed. Usually you cannot finance closing costs again, unless again, it's a government loan. They'll have a government fee on that. Otherwise, conventional, you shouldn't have that. Down payment, so how much you're putting down, in this case $30,000, and then your deposit. So within usually 72 hours of buying a home or putting an offer in and getting it accepted, you have to send the sellers some money, usually around 1% of the sale price, not exact, but around 1%. And like your realtor, like Ida, would help you with that, and that's to show the sellers that you're serious about buying the property. So you put a little bit of money out, up front, because you're usually not going to close on a loan for a couple weeks or a month. Then after that deposit, and that deposit does contribute to your down payment. So if your down payment is $30,000, then and you put down $5,000, then the total would still be 30. It wouldn't be 35. And then funds from borrower, we're probably not putting anything there. That could be having to do with your refinance too, because this is also used for the refinance. And then any seller credits. So if the seller is giving you any money towards the purchase, that would be listed here. And then any other adjustments and credits would be listed there. And then you have the total at the bottom. So in this case, again, I didn't fill it out, so it doesn't have all the different numbers. But then that's where how much you need to spend in total would be. So as you can see, this is more detailed than the fee sheet and more broken up. Again, my fee sheet is still broken up in similar kind of sections, but a lot of lenders, it is not. And I don't even really use that fee sheet too much just because it's kind of confusing. I'll show you what we use in a second. But this is what you'll get at the beginning of the loan process. And then if certain changes are made, we have to send you an updated one. Like if you change the interest rate or you lock the interest rate. And where you can see if it's locked or not is up here in the top right of the first page. It says right there, rate lock. Rate lock, no. So if it says yes, it'll show you the date that it's locked through. So in this case, like if it was locked through June 18th, then that would say that right there. And then it would also say your rate. Well, your interest rate is here, but in this case, it's not locked, so that can still change. So this is your loan estimate you get at the beginning of the process, and like I said, it'll be updated maybe a couple times depending on what's going on throughout the process. Once you lock it and you get far enough into the process, you will get this form. That looks like it's called closing disclosure right there. Mm-hmm. So with that closing disclosure, it has the first page looks almost identical, pretty much it is identical to the loan estimate. You got the loan amount, the interest rate, the monthly payment, no prepayment penalties in Minnesota. Some states have those. Monthly payment again broken down. That same confusing section with the estimated taxes, insurance, and association. And then your closing costs and your cash to close. So the difference between closing costs is how much you're paying for the different services and fees involved in the home purchase. The cash to close is going to be the amount that you need to bring to the closing minus anything you already put down. So that earnest money I mentioned, if you put down $5,000, and then let's say your closing costs are $10,000 and your down payment's $30,000. I know this is getting confusing, but you'd end up having about $35,000 down because $10,000 closing costs, $30,000 down payment, that's $40,000. You already put $5,000 up front, so 40 minus 5. That means this cash to close number would show $35,000. And I can't speak for other lenders, but I know us, we will always go over this with you prior to closing. Like I'll send it to you. We can do a Zoom or we can do a phone call and go over it together to make sure that you understand it. You know how much you need to bring to closing and things like that, which from what I hear in the industry is not very common. And as a loan officer, this isn't always a very fun part of the job because you as a client, you can sit there and ask, what's this? What's this? What's this? Yep. Nobody likes questions if, we're lazy. Everybody likes a job where you can just come in, do it quick and be done. So if people are asking a lot of questions, sometimes loan officers don't like that, but you're paying them to be able to ask those questions, and you're paying them for them to take it seriously and to give you the time to explain it. So if they don't have time for you, then you probably shouldn't make time for them, so to speak. So that's my little rant there. But where the real value of the closing disclosure comes in is this page, these next couple pages. So as you can see, this is very different. Still section A right here. Oops. Loan origination charges. But notice each item has its own line item. So in this case, there's no points. But if there's going to be points or discount points, there's different terms they can use. It's going to be right there. That's also where the processing fee and the admin fee and the application fee and all those other fees, origination fees, underwriting fees, that's where all those will show up. Every lender is going to have underwriting fees. Every lender is going to have, that's the one fee you'll pretty much always have. Sometimes you'll have origination fee. Sometimes you won't. Sometimes, I'd say if you have processing fees, administration fees, application fees, especially if they're paying you or forcing you to pay just to apply, I would never work with that lender. But those are all kind of like additional costs. So like us, we don't charge any of those. So you're not going to see a processing fee. You're not going to see anything. The only thing you're going to see is that underwriting fee, and that's to pay the underwriter. So then you see section B, same thing, section C, section E for those government fees, section F, G, all the same ones. But again, notice, that's the fee sheet. Notice how different it is. See this one, everything on the loan estimate at the beginning, everything's here, but it's kind of, it's not as detailed broken up. CD, or the closing disclosure, everything is going to be broken up. Mm-hmm. And this is the column that shows that you're paying it at closing. So these are the big columns you want to pay attention to, are the first two, at closing. And this is anything you paid before closing. So usually the appraisal, you'll pay that before closing. So down here, there'll be an appraisal fee in section B. It'll be listed right in here. And then you'll go over, and it should be listed over here. At the beginning of the process, it'll be here. At the end, if you already paid for it, it'll be listed here. And then anything farther over, that's seller paid. And then that's anything paid by anyone else, the lender, the realtor, etc. So again, this is the
information now, you guys.
You'll get
keep
like
listening.
a preliminary one usually. Doesn't have everything down to the penny. But once you get fully approved, or we call it clear to close or CTC, then we'll work with the title company, make sure all our numbers match, because the title company is the one that files the paperwork with the government to make sure you get credit for owning the property, and protects you from a legal standpoint as far as that property ownership goes. And then we will go over the final one with you, like I said, and send it to you. And we can go over every single line item and every single penny to explain what you're spending your money on. And that's, like I said, not everybody likes to go through every line item, but I'd at least pay attention to what's in here. And then also at least the main first page that has all the totals for everything. But it is good, especially look at this, just to make sure you're not paying for anything you don't know about. And the rest of this as well, just to be able to understand it, because then you know where your money's going every month. Now, the last page, once we go through all those items, this will again summarize everything. So this will show you the original estimate we used, and then this will show the final estimate. So you can also compare these and see like, hey, did some of these fees go way up? If all of a sudden one of these fees is zero and then this one's like 10,000, you want to ask the loan officer and we'll say, why did that one change? If there's a good reason, then sure. If there's not a good reason, or they forgot to tell you something, well, now you figured it out before you close. Because once you close, it's done. There's no going back and changing anything. So this is kind of where Ida's client that worked with the other lender, this is kind of where they started to figure out, wait a second, up in section A here, we have a $5,000, $6,000 charge, whatever it was, for points. We didn't know we were paying that. And then down here, it also showed that it went up. So there's a couple places where you can start to identify those things. And I mean, nobody's perfect. Some people forget things, but as loan officers, we're professionals. We're supposed to remember these things for you. That's what you're paying us for. So a lot of times the lender or the loan officer will tell you, oh, oops, I forgot about that. But, I won't comment more on that. But yes, you want to hold them accountable. And
Exactly.
Like I said, you want to go over this. If they're trying to avoid going over this with you, that's also a red flag. Because a lot of I have a loan officer right now who's came to us as a client, and he's worked at Wells Fargo for like over 25 years. He's one of their top loan officers, and he's working with us instead of them. So I'll let you just figure out what that means. But down here, getting back to this form, you have the summaries of transaction right there. So again, I'll make a video of all this too. So, and it'll be a screen recording, so you won't have all the stuff, all that, hard to read on there. It'll be a lot better quality, but this is where it's going to re-summarize everything. So this is what's due from you. So over here, you'll have the purchase price. So 400,000. And then also anything that's closing costs, which this one's not built out, will be listed here. So usually this is actually going to be a little bit higher than the purchase price, because if your closing costs are 10,000, it's going to be 400,000 for the purchase price, 10,000 for closing costs. Anything else that might be up, part of this, like property tax adjustment, HOA adjustments, or anything the seller's already paid for that you need to pay them back, will be listed down here. And then you'll see the true total of what you're paying. And again, it will match the numbers on everything else. And it can be kind of complicated. So that's where you can ask your loan officer, how do all these things match up, and why are, because again, you're looking at a lot of different numbers. So they should be able to show you how everything's connected. Mm-hmm. And then the second to last section is this L section. This shows anything you paid already. So that money you put down, like your deposit, that will be listed there, that 5,000. The loan amount will also be listed there. If you were taking out additional loans, that'll be listed there. And then also any credits the sellers are giving you will be listed over there. And then again, any adjustments or anything that was unpaid by the seller that you're paying, that they need to give you the money back. So if like they forgot to pay the property taxes and you're paying that at closing, they'll give you a credit back because they own the property. So all that to say, this is kind of another summary screen at the end. And then at the very bottom, you'll have that same thing, how much you're paying. So in this case, it'd be like 400 plus, well, in this case, I don't have all those other numbers in there, but 400,000 for the purchase price, 370 is the loan amount. So that's why you see the negative symbol right there, right above my cursor. I don't know if you guys can see that. Mm-hmm. There's a negative symbol in front of that. So then 30,000 again is the total right there. So that's in a quick summary. That is what you're looking at as far as forms. And this is the most important one because this will be the one you sign at closing that finalizes the deal. And then the title company will have a totally different one. I don't have that up right now. It's called the Alta, but it has all the same fees. Their fees, they have fees on the left, fees on the right. We can go over that another time, but it's the same exact information as this. It's just in a different format. So that's pretty much the summary. And then down here, you'll have other information. I guess one thing we don't usually talk about is a demand feature. Nope, not that one, this one. Does your loan have a demand feature? That's also kind of something you don't really want to have. And I would not personally work with a lender who puts a loan that has a demand feature. Demand feature on a loan is when the lender can say, you know what, for whatever reason, we need you to pay off this loan immediately. So you got to pay us in the next 30 days. We need that $370,000. So that's a good thing to just double check right there. Again, I don't talk about this very much because we don't do loans that have demand features. But you want to make sure that it does not have that because you don't want them to be able to call you and tell you that.
Wow.
Above that is an assumption. I'd say 99% of lenders do not do this on conventional loans anymore. And that's where you can take over the loan from somebody else and get the same interest rate. The last couple of years, that's become popular. People sell their house and say, hey, you can assume my loan. I have a 3% interest rate. If you buy the house, you can assume the loan. But like I said, most conventional loans, I'd say pretty much, I'm not aware of any conventional loans that let you do that. And then for government loans like FHA, it's up to FHA if they let you, or FHA will actually let you know, but it's up to the lender. So it's the lender, and most of the lenders I work with, they allow you to do that, but they are not just going to let you sell the property with it. Usually you have to have a reason. So like a couple of years ago, we had a client, actually one of Ida's clients, and they're getting divorced, and she wanted to buy the house from her husband or basically refinance it. But because it was a government loan, we were able to do an assumption, so they didn't have to pay all the refinance fees, and they didn't actually have to use me because the assumption you have to go through the current lender. Yeah. So I basically helped them get it set up, and then they got it set up with the other lender, got it assumed, and then they transferred the house ownership and the loan from the husband to only the wife, and she didn't have to go back through the loan process. But that's just kind of something that's come up in the last few years that a lot of people ask about. But again, usually it's only on government loans, and you have to have a very good reason because they're going to ask a lot of questions and for a lot of documents to be able to actually do that. So demand feature, you don't want to have that. This will also talk about your late payment, how much the late charge is. Usually it's 5%, which is quite a bit. Usually it's around like 80 to 120 bucks, something like that. It'll talk about negative amortization, which we don't do loans like that. That's where you're paying interest only. Those are a totally different type of loan. Not really usually a good type of loan. Usually I think every lender I know, they do not accept partial payments where you can pay like half the bill now because they'll just sit in. I'm not going to get into all these because these are kind of some small, like one-off detailed things. But you guys can read through it, or if you have questions, you can let me know. It'll show how much interest you're paying over the life of the loan. And then at the bottom, it'll have everybody's contact information. Lender, broker, mortgage broker, real estate broker for the buyer, real estate broker for the seller, and then the settlement agent who works at the title company. Sorry, I didn't realize you couldn't read that. So real estate agents, mortgage broker, lender, and then all the information, license numbers. and things like that. So that's the total closing disclosure. But again, the main things with this are you want to work with somebody who is going to go over those details with you and be able to explain it and basically connect the dots for you for why you're spending what you're spending. So I don't know if you guys have any questions. I see somebody else join the chat. So I guess does anybody? I wasn't really looking at the comments. So did anybody have any questions, or does anybody have questions right now?
No, not really. I have not seen anyone, even from YouTube. I'm like, today we have the same kind of people similar to YouTube. I'm really impressed. People are coming on my YouTube and listening stuff today. So that's an amazing thing. But no, I have not heard anything. No question, nothing. But it is a lot of good information, Peter, because I did not even had an idea what you just said. I have never read it on those areas, to be honest, because you've been doing my financing most of the time. But it is an interesting thing, to be honest. Never like those demand prepay stuff that they have to pay if demanding them. I did not know that there's such a thing. So it's a lot of information that we gathered, and I really, really appreciate your time. Seriously, this is the document that everyone should ask. We have a closing on Friday. So actually, our buyer here on YouTube right now, actually, he answered some questions for me earlier. So with that said, those are the stuff that Peter is going to go over. I have not heard, we closed a little bit over, 50 some property on a yearly basis. Those people have been fed this information. So when they purchase their next property, they are not going to be new about this process. So the reason that I said all the time, interview whomever that you're going to work with. The person that you are going to be interviewing, you are comfortable with, if that person is going to teach you every single thing that you need to know. To be honest, when I purchased my first home, I was airheaded, did not have no clue. The reason that I know about the mortgage process, because I worked in that area in the past. So because of that, it was easy for me to look at the numbers and go a lot of stuff. Things change after, every year there's things change. That's why we have to take continuous education classes and renew our license. But since what happened in 2008 and 9, most of the documents and most of those information are changed. So what Peter just said, it was not my, it used to be good faith estimates. And that's what the paperwork used to look like. What he just showed you, yes, it is. But the backside, what he just explained to me and to us, I have not seen it. So you see, I learn every day. It's not only you guys are learning. I am in this business for so many years. Still, there is something that I don't have no clue that I'm learning still. So this information, in case if you guys wanted to go back and listen it, as it is under Gojo Realty on my YouTube account. Right now, I'm in live as well with TikTok. You guys can go back and review what we just learned. Yes, it is in English. Guess what? Your loan officer, the paperwork, your real estate agents, sometimes they will be English speakers. So the reason that I brought Peter with me every Wednesday, sometimes it is good to hear the words, the process, in English. Because if you go to bank, who's going to be financing you? Someone that who speak English. You cannot always look for someone that who speak your language, right? So because of that, I need you to have some kind of oomph or information in order for you to go farther, okay? So there is a lot of stuff today that he fed us. Let us settle. You probably purchased the property. You probably never had this experience in the past. Just you can write me one if you ever had this kind of experience. If you never had this kind of experience, how he define it and explain to you, write two for me, both YouTube or on TikTok, because I wanted to hear that. I have never had an experience. We did not have a social media at that time when we purchased our property. So Mackie put two. So explaining to you guys this kind of stuff a help, because you're not going to be an outsider when you're going, oh, this is what I learned at IDAS. Oh, this is what I learned from Peter. Oh, you know what? They were talking about this thing, but I don't remember it. Again, what you're going to do, you go back to my YouTube account. I wrote it down, disclosure and loan process. It is already in my YouTube. You guys can go back and listen to it. Yes, it's an hour right now, an hour and 15 minutes that we've been on TikTok and YouTube. So that information that you get, I'm telling you, they call it fantastico, right? This is something that you need to learn and understand and process it. And don't fear, ask, call us. Hey, the only thing that I cannot answer you, if you already signed an agreement with the real estate agent, if you guys are calling me and ask me anything, I cannot answer anything for you. The reason being, you are already signed an agreement. They don't allow you to talk to other real estate agents. For that, I cannot help you. But if you're looking for a lender and something that you kind of not trusting the lender that you're working with, I can refer you people that I know in a different state. Any state that you guys are planning to purchase, I can help you guys out. As in, I'm going to meet you. Okay, Peter? If you guys are looking for an agent, or if you're looking for a loan officer, I can try find someone for you in any state. And then then you can interview that person. I have some interview questionnaires. I can be with you if you want to. We can interview them. Then whomever that you're comfortable with, then you jump with that person. Okay? With that said, I don't have no question. I really, really, really appreciate you guys to be here an early morning to sit and listen. Investment or buying a house. What is the process? How did this work? How did that work? Because I'm the one that who usually feed you this information on Sundays, and I'm Harik. So if you guys never followed us in the past, or you don't know who we are, Peter, explain yourself before we close our house, and plus let us know what you're gonna teach us next week, Wednesday as well. You are muted. When you tap, go so that's why I muted you when I was talking. Yep.
Yeah, you're good. So quick, I was gonna say, somebody, it looks like Mula just put a question saying first buyer down payment. I'm guessing you're asking about first time home buyer down payment assistance. So quick, I'll just comment on that. There are a lot of down payment assistance programs. Where we are in Minneapolis here in the Twin Cities, I know of over 50 different programs. There's lender programs, county programs, sometimes even city programs, state programs, federal programs, nonprofits. They're all over the place. I would say most of them are more like 0% loans. People will sell them. They'll call them grants. They'll call them all sorts of things and make them sound really good. We have Minnesota Housing in the state of Minnesota, where a lot of people is very popular. We don't work with them. I'm not a big fan of that program. If you really truly need a house but you don't have any money, my first reaction would be you should probably save and get your finances in order, because as anybody knows who owns a home, once you buy it, there's always more things to fix. If you think having an old car, you have a lot of things to fix. Even if you get a brand new house with warranties and everything, there will still be money you need to spend to maintain it every year. From small things to little things, blah, blah, blah. But if you truly need a house and you don't have the money to do it, that's where down payment assistance is meant to help with. But like I said, a lot of those programs like Minnesota Housing, most of the time there's 0% interest loans that you have to pay back when you refinance or when you sell the house, or if it's no longer your primary house that you're living in. And like I said, some of those are even called grants. And the true story behind those, the reason why the lenders push them is because the lenders make a lot of money on them, especially US Bank, because they're the master servicer. So they make a lot of money on those and they push those. It's not always in your best interest. Now, again, some of them are 0% loans. As long as you know that you have to pay it back in the future, 0% loan for the down payment isn't a bad thing. But, and again, I don't do those, so I've never originated one of those loans. But the feedback I get from a lot of clients who, like when they go to refinance or they go to buy another house and they use Minnesota Housing the first time, is not always positive. For instance, I had a client helping her sell her townhome, and she was upgrading to a single family house. A couple kids, longtime boyfriend, lived together, everything, had their family, wanted to get a bigger house because now they have more kids. Her best friend was her realtor. And again, this isn't on the realtor because realtors aren't overfinanced. The realtors will advertise. The realtors will make all sorts of claims. I've seen it all over Facebook. You want to talk to the loans about lending to the loan officer, and you want to talk about property to the real estate agent, because the real estate agents are experts in real estate, not the loans. So a lot of times they will oversimplify. Sometimes it's accidental, sometimes it's for promotion, whatever. And they post things saying like, oh, free money, no, $1,000 down, buy a house for less than $1,000. That's all meant to get you for them to be able to make money off the sale of your, helping you, which is cool, but you want to be fully informed. And sometimes it falls through the cracks. Sometimes it's purposely not giving you all the information. I'm not here to be the judge of that, but that's why you as a client and why we as individuals always need to stand up for ourselves, because nobody's going to take care of ourselves as well as we take care of ourselves. Like, sounds weird, but so with those programs, I'd say 75 to 80% of them are more like 0% down payment assistance. So you pay it back in the future, but it's a 0% loan. And usually if it's 0% or you have an interest rate, depends on your income level. Because if you're considered higher income, usually you won't qualify for those 0% down payment assistance. You'll actually have a monthly payment of like $100 to $250 a month to pay off that down payment assistance loan. So that's the biggest thing. Now, with that said, there are a few programs that come around that are really good programs. Talking nationally, there's a program, and I think it just ended actually, but it was called a census tract program. We didn't have it in Minnesota. I'm going off memory, so I could be wrong, but I think it was like Chicago, New York City, LA, like big cities. But if you lived in an area that qualified for that program, you could get like $5,000 to $10,000 basically for free. It wasn't a loan or anything like that. In Minnesota, the two best programs that I know of are, one is the Ramsey County Down Payment Assistance. It's called First Home. However, that one has been suspended. That one, they'll give you up to 20, if you're first generation, they'll give you up to 25% of the of the purchase price, or it's based either off income or purchase price. It's kind of, there's like three different ways to calculate it, and they give you the lowest amount. But that one, you can get up to like 90 grand. But again, that one's paused because they ran out of money. The best one that I know of right now is the 32,000 first generation home buyer program. So if you and your parents have never owned a home, you can qualify for up to 32,000 as long as you meet the qualifications. That's a whole nother process. If you want to talk about it, reach out to me, message me on here, because I know we're getting near the end of our time. But I'd say that's the best program in Minnesota that I know of right now. If you don't qualify for those, because those are first generation, meaning you and your parents have never owned a home. If you're first time home buyer, minimum, you can still get benefits on the interest rate, mortgage insurance, loan program. We have first time home buyer loan programs. Every lender does. And it's actually not lender specific, to be honest. It's based off the conventional loan program. FHA is a different situation. That's more based off credit score, what your rate will be. Right now, we have promotions going where even if your credit's as low as, I have to go back and check, but I think it's down to 600, you can still get the same rate as if your credit was like 760 for FHA. So that saves people quite a bit of money. I think we had a client that closed in April. They saved about, I think it was like $7,000 on like a $600,000 home on the rate cost for that, because they had a credit score, I think it was around like 620. So the rate was about, it's like $6,000 to $8,000 cheaper, I think is what it was. So there's those type of things, but just when you hear down payment assistance or you hear first time home buyer or first generation, make sure you get the details and truly understand, because like I was saying, that client, that family, they're selling their townhome, Minnesota housing, and her best friend was a realtor. The lender, I'm not sure how she met the lender, but they didn't tell her that she had to pay back $18,000. So she sold the house thinking that she was going to make about $17,000. And at the end of the day, she ended up having to pay about $500 at closing to sell her house that she has owned for 3 years, because she had to pay that down payment assistance back. So it's just something you want to be aware of. If you're doing down payment assistance, you want to make sure you have all the details, because the lenders, the realtors, everybody, they like to just tell you the best parts and not necessarily all the other details. Maybe they forget. Again, I'm not here to tell you what their intentions are, but a lot of times the clients don't know that they have to pay it back. So that's the number one question I would ask anytime you're using any down payment assistance. What are the terms of repayment? And because even the ones that are called grants, sometimes you have to pay those ones back. So all that to say, since we're wrapping up, again, my name's Peter, Custom Made Mortgages, licensed in the state of Minnesota. This is all hypothetical, so we're not extending credit. If you guys want to apply or you guys have questions, please feel free to reach out. You can call, email, text, whatever is easiest for you. We can do a Zoom calls. We can do screen shares and show you things, however you want to do it. And I would say, if you know your credit's good, you have very little debt, solid W-2 job, you work 40 hours a week, you get salary or hourly pay, your hours are consistent, you probably don't have a lot to do to get ready for it. You might be ready today. Yep. If you have debt, if you have collections, charge-offs, low credit, high debt, your income's been all over the place, or you've been switching jobs over and over, probably talk to us at least 3 months ahead of time. Again, if you want to buy now and that's the situation, you can still call. But ideally, you want to plan ahead a little bit. So then we can say, okay, hey, if your credit's 620, yeah, maybe we can do the loan. But if you're not doing it for 3 to 6 months, maybe we can help you build your credit up to like 680. And then you can get a better loan term, and you can get a better lower interest rate, and you can get a better lower monthly payment, that type of thing, lower down payment. So like one of Ida's and I clients that I'm really proud of, we started working with him. Well, he didn't start working on credit until I think November last year. But from November to April, we got his credit score up like 150 points. And he paid out, he probably spent about $5,000 paying off debt. So that's huge. Like usually you don't see increases that much. That's an anomaly, but we can work on all those things. So yes, so Peter, Custom Made Mortgages, call me, message me if you have questions, and I'll let Ida pull it out.
Thank you, Peter. I don't thank enough to Peter, because he is, we're not only a partner in this business, we help a lot of people in the community. We go to different events to support our community. Because of that, he never say I'm tired. He has a little two boys. Mine is two already graduated. But he has a little new kid, not even a year old, but he commit his time to help the community because he have seen how much information that we are lacking to help to get through the process. So with that said, today we talked about loan disclosure, how they disclose it to you, how you can read it, and how you can define certain things that sometimes the lender promise, but without not knowing, you are paying for it. They call it discount point. It could be some other crazy name on your disclosure paperwork. Disclosure means like the statement that he was just explained to us earlier. So with that said, this information, if you guys are coming a little bit late, it is in my YouTube account. You guys will be able to go review it for like an hour and a half, but you can, listen it as long as you want. So with that said, my name is Ida. I am a real estate agent in the state of Minnesota, and I am do property management as well, and work with the team. I am always on TikTok to try to, give some information. The past couple of incidents that happened before we close or after we close, some people are coming and asking question. And so what we keep telling you guys that ask question to go farther. Ask question. Question is not gonna hurt, and don't be shy about it. So connect with us whenever you need any help. We are here, 7 days a week. It depends, what we need to do. Someone just asked a question. Thank you. I need to know more if you have information about Chicago. So there is a down payment assistance in Chicago. You can get a hold of me. I will connect you with the real estate agent and loan officers in there that they can break it down for you. So any state that you guys live in, there is a down payment assistance. But that down payment assistance, it is good for you. It is worth it for you to use it. Is it worth it to invest on that thing? So that's the stuff that Peter was explained to you guys earlier. Reach out to me. My number, it is all on social media. If you guys look for Ida Tazarra, you guys can find me. Gojo Realty in Minnesota, you guys will find my information. Easy to find me. Okay. If you guys have not followed us, go ahead and follow, subscribe, go to my YouTube account. There is a lot of information. Anytime I am teaching, I've been recording the past, I can say 6 months. There is a lot of good information in there. Most of the client that we are, who's coming, purchasing property through us right now by finding me on Facebook, TikTok, Instagram, and all that. So information is there, and let's keep in touch. I will see you hopefully this coming Sunday, if I don't have no crazy stuff. So my second child graduated with honor last week. I am a proud mom. I am so happy for him. He is planning to go to University of Minnesota to go to pre-med. That's what he decided. He was going to for engineering. So now he's switching. We never know, but both are a good major. So we're going to have a lot of parties, graduation parties and all that. And he is track and field runner, Raj, So let's state Alfual. So the 10th and the 12th, he's going to be running. So pray for him. And if you guys are Islam, dua for him. And beside that, I have 3 boys. All of them are make me proud as a mom. I love them. They do so good and really genuine, disciplined, elegant kids. So when they get older, we'll talk about that. Am I going to find them some Ethiopian girls that for them to get married? But right now, I don't think they're ready. If they're here, they might be killing me, but they're not at home today. So with that said, thank you guys for coming. And I'll see you guys hopefully at 6:30 p.m. in Midwest time next week. Perfect. So